assets and depreciation are, you need to categorize your assets into fixtures, buildings, plants, because they all have different rights, different age, right? Buildings mostly will be longer years. Plant, which means you are using for your production facility. So maybe your generators, your machines, your other things. So, and fixture means the building fixtures. So you have to categorize your asset properly so that you can charge the cluster rate. So normally we are not charging the depreciation for each and every asset, single asset. We charge based on category. So if something we assume as our furniture, we will charge maybe let's say 5 years depreciation. If something we recognize as a plant, maybe it's a higher depreciation. If we consider something as a building, it's higher depreciation. So whatever it goes into that category will automatically get attracted to that. But you are not defining the depreciation for each particular asset. Okay, and the minimum amount should be set to put into the register. Otherwise, every single thing you will put into your fixed asset. So every company need to have a fixed asset register. So what does the fixed asset register means? It's just a list of your assets, whatever you buy. Why is it important? Hmm? Not really. It doesn't affect company value. You have your asset or you don't have your asset register. But assume if let's say your business is now 10 years older already, and you bought something 10 years ago, not now, and you don't have a list, and your business is in 10 locations, how will you know how much asset you should have and how much you actually have? What if somebody is stealing, right? Somebody, let's say Pandya is not recording the chairs. I come here to teach, I bring the chair with me. So if Pandya does not have a list of assets, they have no idea where the chair goes. Because they don't know their chair was there or not. They may know immediately, but after 2 days, 3 days, they have no idea, right? And how will they measure? They cannot, right? So if I am able to skim it out, I will take the money, right? So your money is lost, but you have no idea where is it. So that companies need to have asset register to control their own assets. Because you are not there every year, right? Every place, especially when your business is a long business or have multiple locations, you have no idea. So you are not present at every location. You don't have CCTVs everywhere. Even CCTVs, people can bring CCTV together, right? So you will lose the assets. So every year, normally first task every company must do, which mostly in Myanmar especially, not even in Myanmar, in Thailand, in Indonesia, everywhere I worked especially in Southeast Asia, they don't make a fixed asset register. They don't register. Whatever you buy, they don't make an itemized list. And every year you're supposed to go and check, does it still exist or not? Now you take, this is owner's control, right? Now you take a scenario of an investor who is coming in from outside and you are telling him, I have a value of $1 million assets. How do you explain? So he will ask you, okay, give me a list. Can you give? You don't have. So you will make up the list of whatever you can see, correct? But if let's say half of the assets are already gone, stolen, so you cannot produce a complete list of assets, right? So the investor will not give you, will not trust you have 1 million or 2 million or 10 million. So it's very important to have a register of fixed assets, especially when your business is growing and you have a lot of locations, lot of assets, mixed use of assets. So it's very important to keep it. Otherwise, it's very difficult to justify in future. Even to the revenue departments. So for tax purposes, for investor purposes, for your own personal control purposes, you need to have a register. And every year, every 2 years, every 3 years, you have to go and check physically. Is it this still exists or not? If it does not exist anymore, stolen, broken, even like say most in the hotels, what we normally face is the chairs are broken. The staff or the general manager, they say, okay, this is broken up. Throw it away, buy a new one. So you buy a new one, you enter into the register, but the one that you throw, you don't enter. means you don't take it out. So your inventory list is asset list continues to grow. And once after 4 years you say, as per my register I need to have 50 chairs, but I can see only 30. Where are the 20 gone? So they will say, oh, it's broken. So where is the broken? Don't know. So that is normally the happens with the businesses which does not maintain a fixed asset register. They experience loss of value immediately. Like if you do a valuation today, they will lose maybe 20% or 30% of their value immediately because they cannot explain where the assets are gone. Okay, and the components. So if let's say you are buying a very big asset which has a lot of components, so you may be losing, you may have a different components which has different life. So we need to recognize it differently, because if let's say you are buying a water treatment plant, so water treatment plant has a chamber, have the motors, have the pipes, all are different value. Maybe the plant will maybe can survive for 2 years, 3 years, or 5 years. Piping maybe can survive for 10 years, right? Or the motor can survive for another 10 years. So you cannot charge all at the same way, all at the same life, different. So you need to cluster, understand how the component works, and then charge separately. Okay, and the register we just discussed. Okay. So normally how we identify which expense is going to be entitled fixed assets or what is going to be an expense. So there is a simple asset test, we call it asset test. When you see the future economic value is there by spending in more than one period of accounting. That is the accounting definition. If whatever you spend, if you see the value of this spending is going to be last for more than a year, it calls for fixed asset. But you may define by your own accounting policy based on your amount, how much you want to recognize as a fixed asset or you want to charge immediately as an expense. But the definition is there. Okay. Example, research and development. So if let's say you are developing a product which normally the startups or the technology companies are doing all the time, right? You are doing a research and development which whenever you are developing a new product, so how do you call it? This research gonna benefit you in future year, right? So you want to capitalize it, means make it a fixed asset or charge to the expense immediately. It depends on the company policy and the results of research. How likely the research is going to be successful. If let's say if the research is getting successful, then okay, you can say the research is going to be successful, I can charge future year. But if the research is not likely to be successful, then it's a expense, right? Immediate expense. So normally when the big companies, they do research and development, if new product, they normally start with expensing it out, but whenever they see the possibility is there that okay, it's gonna get something else, then they put it into a product development cost. So normally they recognize as a product development cost in the initial time without charging to the profit and loss statement. But as soon as they get near to the result, and if they are sure it's gonna go as a product development, if the product will be successful, they capitalize everything. If they see that the chances are very less now, then it goes as a expense. But here you are talking about judgment, which is not standard, right? Every company, even every executive can have different judgment. You change a CEO or change a general manager, their judgment will change, correct? Patents, trademark, license, you're gonna recognize as an asset or fixed asset. Patents means you're gonna use, you pay today, but you're gonna use it tomorrow, right? So you're gonna recognize as a fixed asset most of the time. Database, consumer list. Let's say you spend $10,000 on a Facebook ad to generate a customer list. Will you recognize as a fixed asset or as a expense? advertising expense?
Yeah, maybe it depends on the outcome.
No, you will get a customer list. Let's say you spend $10,000 on a Facebook ad, which can generate you a customer base of 10,000 customers. For startups or businesses, nowadays customer list is a very important tool, right? Because you can generate a lot of business by those customers. So you're gonna use this as a fixed asset or as a expense, as an advertising expense. Highly subjective, right? You can do both. Actually, you can. It depends on the startup. If let's say they put as an expense, their profit and loss will hit, right, immediately, so their value will go down. But if they put as an asset, this asset is maybe valued by another company as equally valued or not. It depends, right? If you don't put into fit P&L, you have to pay a higher tax if you are profitable. If you're not profitable, doesn't matter. If you're not profitable, it's better to put into asset, because at least you are building the asset value, right? But that's what most of the companies nowadays do. Like big companies, uh, Uber or other companies, they spend a lot of money on promotions to build a customer database, and they call it not as advertising expense. They call it mostly that, okay, some companies call it advertising expense. Revenue department come and say this is not capital, this is not advertising expense, because you are going to get the benefit of this customer in the future. So for me, it's a capital expense. Put it into capital and pay the tax. And the companies want to say this is my advertising. But some companies who want to show a profit, they will show this is my capital expense because the benefit will be in the future. Now this is the balance of my profit. So if you want to stay profitable, put it into fixed assets. If you want to save the tax, put into expense. I'm not telling you what to do. It's your judgment. Okay, but there are risks everywhere. The revenue department can take different judgments. Source code. If let's say you buy a source code from somebody, that's also a fixed asset, right? Because you're going to use that for your product development. So source code can be expense or can be depending on how you want to use it. Okay, so that is on the assets and depreciation.